And this is one of my favorite scriptures. My people are destroyed because of lack of knowledge. There are so many, as a culture, as a culture, as a race, we are limited in the knowledge that we receive. So that's one of my goals, is to make sure that we receive the knowledge so that we can apply it and use it to change our situations. Our African Americans, we're hardworking, we're innovative, we're entrepreneurs, we, have a good work ethic, but we're not always taught the other parts of that, what to do with the money once you make it, how to run your business like a business, how to, set up your assets so that they don't just go to the state or to where you're giving a bunch of money away. So that's one of the big things, to get the information out there so that we can all be better.
Welcome, Melanated Married Millionaires in the making and friends, to another impactful episode. We're about to go through and highlight a melanated married couple, or just go through some lessons that we got. Make sure y'all tap in with the conversation. Queen, where can they go to tap in?
TheM4Show.com.
Yes, ma'am. And make sure y'all follow us on Instagram. Queen, where can they follow us on Instagram?
The M4 Show.
Now, if y'all haven't liked and subscribed, it would make the Queen very, very happy. If you can go ahead. Very? What should they do?
You should go ahead and subscribe on Apple Podcasts, Spotify, YouTube, wherever you're watching or listening. Go ahead and hit that subscribe button.
It's free, and your first step to becoming a millionaire. Go ahead and click that button. And let's get into the show.
Let's do it.
Over 50% of Black Americans are unmarried, and only 2% of Black families in America have a net worth over $1 million.
We are on our journey to not only join that 2%, but grow that 2%.
Facts. I'm Devon Travell, creator of Black Wall Street, the board game, with my beautiful co-host.
I'm Sinclair, aka the Health Nerd. You can go to our website at them4show.com, our Instagram at them4show, and our YouTube channel at Melanated Married Millionaires in the Making.
And welcome to the M4 Show. I'm awake. What is going on, beautiful people? Welcome back. This is day 4. Queen, do me a favor. Put us on solo mode. Put us on solo mode. There, yep, you already know. There it is. Welcome to day 4 of the $1 Million Marriage Challenge, y'all. It has been an amazing 3 days so far. Shout out to all of our partners. Shout out to all the married, beautiful couples who have tuned in, tapped in with us over these 3 days. And day 4, we really want to end strong and end with some more and strong. Oh, this side, and strong, and really make sure that y'all can get some functional tax tips from our special guest today. But Queen, how you been feeling about the challenge?
Feeling good. I'm feeling pretty good about, I feel like we've covered a wide array of things that I think every couple needs to be successful.
Facts.
And to build that generational wealth. So I know we've been, yes, we're kind of hosting the challenge, but we've been learning, y'all. We've been over here taking notes. We've been talking about how we're going to implement the stuff that we're learning. So, this was kind of a selfish thing for us. Like, we're going to create a challenge so we can learn, and we hope y'all learn with us.
Yeah.
So I was feeling good.
So we are our main target audience, right? A melanated couple who's looking to build wealth. We are our target audience. So the more that we can create events, podcasts, clothing, experiences, travel trips, like if we know we're going to like it, if we know we're going to learn from it, then we hope that other folks that are on the same path, same journey as us will also learn. If this is your first day and you're watching on Instagram Live, much appreciated. Make sure y'all go to the link in bio, $1MillionMarriageChallenge.com, and register for this event so that you can get the link. All right. Now, if you are in the YouTube, go ahead and introduce yourself inside the chat, inside the comments. Go ahead and put your name, put your city, and maybe one tax question you have. We have a tax professional here, and we've put her through the fire.
We grilled her a little bit.
We've literally grilled her. Marjorie.
But what about?
We appreciate you, Miss Marjorie, but we've asked so many questions. She's been able to answer those questions. And if she didn't know at the time, she did her research and she got back to us. So we're looking forward to presenting you all with Marjorie McPike. And if y'all have questions, definitely make sure y'all put them in the comments, put them in the chat. If you haven't engaged with the challenge yet, this is your day one, allow us to reintroduce ourselves. All right. Hey, we are M4.
Hey.
No, we don't have a song yet. That'd be dope though. But my name is Devon Travell, creator of Black Wall Street, the board game, co-host of the M4 show, Melanated Married Millionaires in the making. And of course, I have my beautiful queen.
Oh, my bad.
I was trying to hype you up.
Oh, please do.
I was trying to hype you up. Yeah, let me rewind. I got my co-host here, the beautiful, the glamorous, the smiling, the dancing, the chef-orific, galactic, stardust queen herself. Please introduce yourself.
I'm glad I sat back for a second.
Listen, it's worth the wait.
What's up, everybody? My name is Sinclair, aka the Health Nerd.
Yes.
And yeah, look, we had a long night, y'all, but we here to make this happen and get these nuggets prepared for tax season.
Let's do it. So let's go ahead and throw up the slides in case it's your first time here. Again, go ahead and introduce yourself. We see the folks that are rolling into live, much appreciated. We want to get into the taxes very, very soon. We want to review why we did this challenge. We wanted to make sure, again, whether you've been married for 20 years or 20 minutes, you had the opportunity to intentionally connect with your partner. Go ahead to the next slide. On day one, we covered marriage communication and comprehending your partner's personality and why they act the way they act, they do the things that they do, and how to communicate effectively with your partner. That was brought to you by Married Into Crazy. You can catch that recording on the website. If you register, you have already received that recording and that replay. And Married Into Crazy also gave us a free disc assessment for everybody who registered. The disc assessment really allows you to break down why you do the things that you do, who are you naturally, but also who are you under a little bit of stress, under a little bit of fire. How do you then adapt and react? And being able to know that about your partner helps you, again, communicate effectively and grow. So make sure y'all register. On day two, what we do, Queen?
On day two, we had Coach T talk to us about life operating principles, family values, and creating your mantra. And we talked about the importance of having a mantra, a personal mantra, a couple mantra, and then a family creed. Is that what he called it?
Creed,
a family creed. And he went through his fire. It was fire. So yeah, that was a really powerful day just to really talk about like treating yourself as important, right? We all are important and you need to treat yourself as important. And the words that you say to yourself are a direct reflection of how you think about yourself and how the level of importance, right, you hold in yourself. So yes, he went through a workshop on how to like create your own mantra and making sure that it really speaks to who you are, and you may need to revisit a couple of times and the importance of just repeating that over and over every single day until it really like resonates and sits in you.
Oh yeah. Let's shout out to Tyree from the Black Book Club. We see you in the building. We can go ahead and throw his comment up there. Much love, Tyree. We definitely want to get you on the podcast to talk about what books we need to be reading as married couples, but also what books our children should be reading growing up as well. So we look forward to having you on the show, King. And on day 3, yesterday, the Queen and I went through the 4 pathways of wealth. We talked about entrepreneurship in detail. Queen, what'd you talk about in detail?
Real estate investing. Why you should invest in real estate.
Yep. We also covered a high level on intellectual property, which is patents, copyrights, trademarks. And then we also did an intro into the stock market and the different ways that you can be investing long-term or short-term. Yes, I got that accent.
Long-term.
Got that accent
He's
from
been
you.
making fun of me.
I got it from you, I promise. Oh my goodness.
Long-term.
Long-term. Let's see who else. I see some more comments in there. Who is that down there?
Grind time.
Grind time. Welcome. All right. So now on day 4, the final day of the challenge, we want to talk to y'all about tax planning. All right. April is right around the corner. It's always right around the corner. All right.
Literally. How is that? Marjorie, maybe you could talk about that.
Right.
What time warp we always get into where April just seems to always feel like it's next month.
literally, right? So it's never too early to start tax planning. Queen, go ahead and solo us. It's never too early to start tax planning and figuring out what is going to be your tax strategy for this upcoming year. So definitely make sure y'all get your pen and pad ready, get your notes ready. If your partner's in the other room, turn up the volume so that they can hear these nuggets, this wisdom, because Marjorie is going to lay it down with some tax tips, strategies, and resources. Queen, are you ready?
I'm ready. I'm ready to get into this.
Pen. Ready. All right. So let's go ahead. Let's add Marjorie McPike to the stream. There she is. Queen, how you living this morning?
I'm good, thank you. How are you guys doing?
You know, we talked earlier. We're on the tired side for our energy, but
Right.
you know, we're here for the people. We're here for the tax tips.
Right.
We appreciate you for
You
rolling
can't be
through.
hanging out, you know. You can't be hanging out with the young people, right?
We can't. So, and this is we're in that time frame where we're in between. Right. We're now removing ourselves from that category of the young people. Yeah, we can't hang with y'all anymore.
You can't hang. You can't. They've been doing it. They do it all the time, right?
Yeah.
They're like weekend after weekend. They have the endurance. You guys are kind of out of practice.
Said they have endurance. Oh yeah, no. Our endurance is low at this point, but our endurance in building wealth is growing.
Yes. Yes.
Right. That's the shift that we're doing. So we're excited to have you join. We do have some folks watching live. So if some questions come in, we'll go ahead and we'll put them on the screen for you so that you can see them and read them. And then of course, you know, selfishly, if we have some questions, we will also pop in and ask some stuff as well.
I'm prepared. I am prepared.
Beautiful. All right. The floor is yours, Ms. McPike.
So, hi, everyone. My name is Marjorie McPike, and I believe I go into that in the next couple of screens. But I just wanted to talk to you guys about tax tips and strategies to build wealth. Really excited to be a part of this challenge. I like what Devon and Sinclair were talking about, how to being intentional. You know, so I think with anything, you have to be intentional in order to see change. And it's the same thing when it comes to your taxes and your strategies to build wealth. So we can just jump ahead to the next one. So this is just a disclaimer. I'm not actually giving you tax advice. You know, this is information only. Everyone's tax situation is unique, so you need to make sure that you speak with your tax professional and that everything is applied to your individual situation. So never think that, you know, people talk. We always discuss, you know, different strategies and different things, but see how that applies to you. Don't just take that for, you know, one size fits all. See if it applies to you. And my goal here is not to give you tax advice. It's just to give you the information. So going on to the next one. So the agenda today is kind of one of my biggest goals is for everyone to understand your taxes. So we'll talk about understanding your taxes, knowing your numbers. We'll go over overlooked deductions, and then we'll talk about tax planning and strategies. So my name is Marjorie. I am a wife. I'm a mother of 2, a grandmother of 3. I am a licensed CPA of 15 years. I have my bachelor's of science in accounting from San Diego State University. I am born and raised in San Diego, California, which is very rare. And I have my master's in tax from Golden Gate University. So my mission is to empower you to run your business like a business, to understand your taxes, and build generational wealth. All 3 of those things go together. So that's my mission. And this is one of my favorite scriptures. My people are destroyed because of lack of knowledge. There are so many, as a culture, as a culture, as a race, we are limited in the knowledge that we receive. So that's one of my goals, is to make sure that we receive the knowledge so that we can apply it and use it to change our situations. Our African Americans, we're hardworking, we're innovative, we're entrepreneurs, we, you know, have a good work ethic, but we're not always taught the other parts of that. You know, what to do with the money once you make it, you know, how to run your business like a business, how to, you know, set up your assets so that they don't just go to the state or to where you're giving a bunch of money away. So that's one of the big things, to get the information out there so that we can all be better. So just some important dates to remember. Coming up, we are in November. Just want to say that now is tax planning season. Couple things. So it's tax planning season. Now is the time to be making adjustments in your 2022 taxes, finances, knowing what your numbers are in order to change that now, because you can't do that in January. The other thing is that this is the last week to file your return electronically. The IRS shuts down every year from middle of November to the beginning of January. And during that time, you can't file your return electronically. So everything just sits there. So if you haven't filed your 2021 return or your 2020, even your 2019, make a rush to your tax preparer and try to get that information in as soon as possible. Filing it electronically, it just makes it so much easier. If you're expecting a refund, you're going to get your refund faster. And you don't want to have more paperwork that sits in the backlog that the IRS has. So the important dates, fourth quarter estimates are due January 17th. January 31st, 1099s are due. February 1st, 1099s are due to the IRS. 3/15 is the S Corp and partnership due date. And then April 18th is the individual and corporate returns due date. And I know we're talking 2023, but you still need to prepare in 2022. And just, talking about the 1099s that need to go out to the individuals, now is the time to be getting the W-9s from your contractors to make sure that you have that information to put on the 1099s. You want to be doing things now in order to save you time and headaches when it comes to January. You should know what's going on in your business up until this point, to where you're just kind of finishing out the year. And when January starts, you start fresh on the new year, ready to go, instead of trying to catch up in 2023 for things that you didn't do in 2022. And that was a bar. Okay, next one.
Okay. We have our first question.
He said that was a bar.
That was a bar. I love it. We have our first question over here.
Okay.
And so you mentioned W-9s and now being the time to get W-9s from your contractors.
Mm-hmm.
Can you explain, just take a step back, if this is their first time hearing about what a W-9 is, how do you know that you need to get a W-9 from somebody?
So if you are a business owner and if you pay someone to provide services to you, and you pay them over $600 in a year, you are required to issue them a 1099. Okay. And on the 1099, it's going to have their name, address, and their employer identification number or their social security number. You get that information by having them complete a W-9. A W-9 is for contractors, similar to a W-4 being for employees. Right? When you start a job, you get a W-4. They request that you fill out a W-4 before you get your first paycheck. As business owners, we need to make that part of our onboarding process, or part of our doing business process, because people are more apt to give you a W-9 or to give you that information when they want to check, right? Before you pay them. Once you pay them, once they're gone, it's hard to get that information. Mm. So, and then as a business owner, you should have your W-9 completed, signed, and in a PDF somewhere sitting, so that if you do business with someone and someone requests it, you just send it off to them. It right. Shouldn't be a major process, right? It's the type of entity, your name, again, the business name, social security number or social security number or EIN, and the address and the type of entity. And then the other thing with the 1099 is that business owners are not required to issue it to corporations. So that's part of the information that's put on that form as well, the entity type. So you'll, as a business owner issuing it, you'll know if someone is a 1090, if they're a corporation, that you won't have to send one to them. But it's better to get the information from everyone than to need it and not have it.
So primarily, if they're operating their business as a sole proprietor or an LLC, is where you would need to get the W-9 from them. The
W-9 from them, and you pay them over $600.
Okay.
Same thing with, talking $600. The 1099Ks, the conversation is PayPal and Venmo are going to start issuing 1099Ks to people that pay out more than, or that have, I guess it's like they process more than $600, right? Mm. So my thing is you're supposed to report all of your income anyway, and you're supposed to be tracking it. So it shouldn't be a big deal if if you issue a form. Your position should be reconciling that form to make sure that what they put on there matches what you have in your books.
Right.
Okay. So that's how I look at it. I recommend to everyone to link their bank account to their accounting software, and you run everything through your bank account and your credit cards and have it all going into the accounting software. And so you know where your money is coming from, you know where it's going out to. And so it's just a matter of checking the information at the end of the year and not trying to get over. Even with Zelle, Zelle is a transfer between bank accounts. Some people are saying that that's a loophole where you won't get a 1099K, but what difference does it matter if you get a 1099K? If you provided the service or you received the money, just report it, right?
Yeah.
I mean, that's just
avoid getting in trouble with the IRS.
The other part about it is that the IRS is matching, so if you receive a 1099 from someone, but you have different information, how do you know that information that's like I said, how do you know that information is correct if you're not tracking it? Right. And if you go and you file your return and you say that you had $10,000 of income, but someone reported that they paid you $20,000, the IRS is going to come back at you. So you just want to make sure that you're tracking everything and that you're reporting everything.
All right. Thank you. Thank you for that clarification. I know we got questions over here, but if y'all have any questions, if you're watching and you have questions as we're going, we're giving she's giving a lot of game here. Right. Make sure you drop your questions in the comments and we'll pop them up and she'll be able to answer them.
And please ask questions. So, excuse me. So tax season is easier if you have all of your documents organized. Tax season, like I said, it's not supposed to be a frantic rush for getting everything and just filing a return. You should know beforehand what to expect, and you're just, filing the return as a form of compliance. So, to the next one. So, as a business owner, you should make sure that you have your formation documents in a safe place, and that you provide all that information to the person that's preparing your tax returns. The articles of incorporation, if you're a corporation, the articles of organization if you're a limited liability corporation, your employer identification number, and if you are a partnership or if you are a multi-shareholder corporation that you have, or S Corp I should say, that you have all the shareholder or partner information available, because all of that gets reported. It's needed to prepare the tax return. And the more information that you provide to your tax professional ahead of time, it just makes the process that much easier. So we can go. Receipts and reports. We talked about the 1099Ks that are going to come from third-party processors. So you want to make sure that you have those. Just saying hi to some of my people over here. Make sure that you have those available and provided. Again, you want to make sure that information is included on your return because you don't want the IRS to come back at you. Any 1099s that you received, receipts for purchases, major purchases, you should keep receipts for everything or almost everything, but I'm going to say everything. Keep your receipts. Some people say you don't have to keep it for, smaller purchases, but the goal is to make sure that you have your receipts, and then your bank statements and credit card statements. So they're asking, does everyone know what an EIN is and why you need it? So an EIN is an employer identification number, and that identifies your business as an entity, similar to a social security number for an individual. One of the benefits of obtaining an EIN is, again, because you want your business to be separate. If you're actually forming a corporation, you have to have an employer identification number. You use it to report payroll. You use it to file your tax return. But it's also good for reporting and building business credit. So that's a good piece to have. If you're going to, again, run your business like a business, set it up as the way you should, incorporate or form an LLC, get your EIN, your employer identification number, open your business bank account. You can obtain an employer identification number online for free through the IRS website. So going back we'll go to the next one. A lot of businesses are starting online, selling products. So you may have sales tax reports that you need to submit. And if you filed those, you want to have that information, to forward to your tax preparer, because all of that makes a difference with reconciling all the numbers. We want to make sure that the numbers tie and that you're providing a clear return that can be substantiated, right? You don't want it to be audited. And then if you are audited, you want to be able to substantiate what's on your return. If you've issued any 1099s, you want to include that information. Keep in mind that you are required to issue 1099s if you pay someone more than $600. And the IRS has penalties for not filing those. And any payroll tax returns, want to make sure that everything is categorized as payroll. If you are an S corporation, you should be paying yourself a salary, reasonable compensation, and then keep track of inventory. A lot of smaller businesses don't have a lot of inventory, but that's something to keep track of because that makes a difference as far as how it's reported on the tax return. It's not so much of an expense. It's just a cost of having inventory is an asset, right? So it's not an expense that's deducted. So you want to keep track of that as well. And then because I touched on payroll tax returns, let's just talk about how you pay yourself as a business owner. So if you are a single member LLC, you are considered a disregarded entity and you will file a Schedule C because as if you are a sole proprietor. As a sole proprietor, you can't pay yourself a salary. You're just going to be taking money out of the account as an owner's draw. So that's for a single member LLC, a sole proprietor. In a partnership, you get guaranteed payments, right? But that doesn't mean that you're getting payroll. In order to pay yourself where you're receiving a W-2, they're withholding taxes as an employee, you have to either be an S corporation or a corporation. And with an S corporation, you are required to pay yourself reasonable compensation. So keep that in mind. You can't just, I've had people tell me, I had a partnership one time that said, oh, we put ourselves on payroll. It's like, well, you can't do that. So if you have questions about how to take money out of your entity, make sure that you reach out and ask someone. So going on to the next slide. So this is kind of like an overview of the tax return. So income is gross income from whatever source derived, unless it's specifically included. So common income is wages, dividends, capital gains, business income, and then other miscellaneous income. But those are the big things: wages, dividends, and capital gains. And then your deductions, just the next slide. The standard deduction versus itemized deduction. So when you look at a couple of years ago, when they changed the tax law, they increased the standard deduction and they removed the exemptions. So most people these days, their standard deduction is more than the itemized deduction, but you still want to make sure that you're calculating that, because it could be that you're so close to where, there could be some deductions that you haven't thought about that you could include in order to make sure that so that your itemized deductions are more. So common itemized deductions are mortgage interest, property taxes, sales taxes, DMV fees, actually the license fee when you register your vehicle, and charitable contributions. Charitable contributions is a big thing because you can deduct, I think it was 100% in 2022. It's either 100% or 60%. My apologies. But it's one of those, but it's a big deduction. And that's one of the deductions that you can maximize. So like a lot of W-2 owners or W-2 wage owners or wage earners want to know what's the best way, how can they reduce their taxes? There's only so many things that you can do, and charitable contributions is one. Most people give 10% to tithes, and if you're making $100,000, that could be $10,000. If you're a single person, the standard deduction is like $12,000, so that's a good portion of it. So those are standard deductions. Those are deductions. And then the standard deduction is just the set amount. It's a certain amount for single, married filing jointly, married filing separate, and then head of household. And then credits. So credits are different than deductions. Deductions reduce your taxable income. A credit is going to reduce your tax. Okay. So when you're going through the flow of the tax return, you go your income minus your deductions, and then you end up with your taxable income. So when you have the taxable income, the credits will actually wipe out. So you have your taxable income, then they calculate the tax, and then the credits will actually wipe out the tax, or reduce the tax, I should say, not wipe out. So, so common credits are earned income credit, the child dependent care credit, and the education credit. Looks like I may have had that. Keep in mind that, to go back one more. So keep in mind that some of these credits are refundable and some of them aren't. And I often tell people, you know, a lot of times when someone's getting a refund, especially when you have someone that's a lower wage earner, it's not always, how would you say it? Sometimes it's their money, sometimes it's a credit, right? So earned income credit is refundable. So you see some people that are getting, you know, like a lot of money because they make low and they have children. So that could be the earned income credit. If you're getting a refund and you're a wage earner, a high wage earner, you may want to check to see why you're getting that refund, because it could be just your money that they've been withholding that they're sending back to you. So, any questions?
Oh, you know it. So I have two questions that they're kind of similar, but when you file as a married couple, you can do married file jointly or you can do separate filings. I'm wondering, is there any tips and strategies on when you should file jointly and when you should file separately? And then the second kind of a similar question is the whole head of household thing. And if the head of house, like, how does that actually impact your tax liability on who you choose to be the head of household? Look, we're gonna get right back into the amazing podcast. But if you didn't know, in 2017 we created Black Wall Street, the board game, because we thought more families needed to know about the history of Tulsa Black Wall Street. More families needed to know about the legacy of Black excellence left behind of Tulsa Black Wall Street, that we can own a Madam C.J. Walker Beauty Salon, we can have a Booker T. Washington High School, we can have an Uncle Steve's Barbecue, we can have a Renaissance man like Simon Berry, who had his own taxi service and bus service that got bought out by the city of Tulsa. We have brilliance in our DNA, and we wanted to make sure that your family can play a game that teaches them about this brilliance. So we have Black Wall Street, the board game, right here. We had the first edition available in 2017. That got sold out. We're on the second edition right now, or you can get the beautiful masterpiece version of the game as well. It's up to you. Head to playblackwallstreet.com and get yourself Black Wall Street, the board game, to empower you, your family, and generations to come. Playblackwallstreet.com. Let's get back to the episode.
So that's a good question. Head of household is not, in a tax sense, is not the same as in the head of household looking at how a marriage is structured, right? Head of household in the tax sense is for a person that is not married, that maintains the household for an individual, right? So a single parent, right? They're living by themselves, they're taking care of their child, you know, that's considered a head of household. It's not you and I live in the house, you know, we're married, but you claim head of household and I claim single, or, you know, that's not how it is. It's like your filing status is based on what you are at the end of the year, right? So if you're married, December 31st, you're married. If you're separated, you're single. If you head of household, it also depends on like how many months you've been. So it has to be like over 6 months that you've been in the house by yourself taking care of this child or this person. Okay. So that's where the difference is. When it comes to married filing jointly versus married filing separately, a lot of times it won't make a difference, but it could if there's like a big disparity in income, right? So say for instance, one person makes a lot of money and then the other person doesn't. So then you have different tax rates, right? But you also have to look at it that you have different tax rates when you're married filing separately compared to married filing jointly. So it's not one is always better. It's kind of it's a unique situation. So you need to look at the numbers and see how it all fits together. Most of the times it's better if you file married filing jointly.
Got it. Yeah, I think sorry, what was that, Margie?
In California, it's a community property state. So, you know, on the California side, you have to split everything in half anyway.
Gotcha.
So.
And then you talked about the LLC or sole proprietor being a pass-through entity. Can you explain what that means? If I have a 9-to-5, my partner also has a 9-to-5, and we also have this business, how does that come together to create our taxable income?
So, a sole proprietorship and a LLC, it's not a pass-through. A single member LLC is a disregarded entity. The IRS doesn't recognize it, but the state recognizes it. So it's reported on your Schedule C. Okay. Same way as if you didn't form an entity, if you didn't go and form an LLC, but you started doing business, you would just report that on your Schedule C. Okay. So that income gets added to the other income on your tax return, whether it's an income or a loss. So if you have a loss from the business, it gets deducted from the other income. If it's income, it's added to it. So it's just part of your tax return. It's just on a different schedule, but it still flows through to page 1 of the tax return. It's not like it's a separate return for like an S corporation files a totally separate return. And that's a pass-through entity. So the S corporation will actually file the tax return, and then you'll get a K1, or the shareholders will get a K1 for their portion of the income from that return. And then you pick that up on your individual return. But another thing with the sole proprietor is that they pay self-employment taxes. So self-employment taxes it's kind of like the normal number is 15.3%, right? Because it's the FICA for the employer and the employee that you're paying. It changes as you get past the one limit, so like over $100,000, but you're still paying that at least 15.3% on the first like $100,000 of income from your sole proprietor or your single member LLC. Got
it. Okay. So again, y'all. Yes, Queen.
Oh, if you got any other questions?
Oh no, I think I'm good. If y'all have questions, definitely make sure you put it in there. I know we're talking a lot of K1, Schedule C, 1099, and this may be your first time engaging in a tax conversation. So to get the most out of this, please ask any question inside the chat, simple or complex, and we'll see if we can get to it. All right. But Marjorie, appreciate you. It's back on you.
Okay. So so know your numbers. We'll go to the next slide. So it's important that you know your numbers. So bookkeeping basics, excuse me. So bookkeeping basics, for a business owner, you want to track everything. I recommend that you use a software and link all your bank and credit card accounts that you use for the business. You should keep business and personal separate. Not you should, but it's important that you keep business and personal separate if you're wanting to draw the line on your business. If you're a sole proprietor, it's like it's so, it's not so much because you are a sole proprietor. I still recommend that people have a business bank account. But if you are an LLC or corporation or S corporation, you definitely need to keep your business and personal separate because you want to maintain that liability protection. So the reason why you form an entity is so that you're protected. Part of it is so that you're protected from someone suing you, right? But how can you want someone to not sue you, but you're not acting like you're a business, right? So it's like, if you're going to be a business, my whole thing, run your business like a business, keep everything separate, form your entity, keep your business accounting here and your personal accounting here. And then documentation is key. Talk about saving receipts, make sure you have your bank and credit card statements, just being able to substantiate what it is that you're putting on your return. And then I think, so go to the next one. So it's important that you summarize all your transactions for your business. Excel is okay if you're just starting out. If you have a lot of transactions, I'm not a fan of Excel because you can't produce a report, right? If you have an accounting software like QuickBooks, I'm a QuickBooks Online fan. You have your bank accounts being linked, your credit cards are linked, you're pulling in all your transactions. You can easily go in and produce a P&L and know what your what your profit and loss is, how much money you've made for the year, right? You can prepare a report where it's going to compare different months. It's challenging to do that in Excel because it's kind of like a flat statement. And then anytime you make a change in one thing, you have to change something else. Whereas in QuickBooks or in accounting software, it's going to do it automatically for you. So you also want to be able to, sorry guys, you also want to be able to review your bank and credit card statements for transactions that may not have been paid through your business. Sometimes, it may slip up. You may have one that you run through the private personal bank account, but you want to keep those so that you can count those as business expenses as well. Then we can go to the next slide. Highly recommended accounting software. Yes, I love QuickBooks Online. Reconcile your bank and credit card accounts every month. Tracking is so important. Even though you have things that are being pulled in there, it's important to look at the numbers. It's all about being intentional, right? So you need to intentionally reconcile your bank account, intentionally review your reports, intentionally see if you're making a profit, how you're not making or I shouldn't say how you're not making a profit, how you're spending your money. You could have hundreds of dollars going out for dues and subscriptions. It's easy to kind of add another expense, Calendly, Adobe, Planoly, Later, all of those different things, right? And if you never look at it, you won't know that that's an expense that's coming out. I had that happen where with a client where they just had all these different fees coming out, ConvertKit and something else and Sam Card and all this. And it's like, if you don't ever look at it, you won't know that those are expenses, and it's money, right? It's your money that's going out the door. So you can do something proactively to change that. So it's good to be able to look at your information and keep track of your deductions. So look for duplicates. Sometimes that happens as well. Somebody may charge you twice for something. They may be a fraudulent charge, but if you never look at your statements, you won't know that. So just kind of flipping it to a W-2 earner, you should know your income and withholding, right? It's not just for business owners, because like I said, you may get to the end of the year and you may have to pay. Say first you get to the end of the year, you have to pay a lot. Why is it you have to pay a lot? Could you have changed your withholding throughout the year and paid through the year, or you get a big refund? It's like, you having a big refund at the end of the year, is that because they took out too much money? Is that because of your deductions? Did you have something happen in the current year that's not going to happen going forward? You could take that money and use it to invest. You may end up with $10,000 at the end of the year. It's like you could have taken that and invested in something else instead of just having it sitting with the IRS. So know your income and withholding for W-2, and then keep track of your deductions. Missed deductions, a big one is charity. The money that you give to charity, non-cash charitable contributions. If you go to, I want to say it's like either goodwill.com or .org or Salvation Army, you can look up like a donation estimator, right? So go in there and check that on and think about it. You grab a bag of clothes, you clean out your closet, you got like 10 shirts and 10 pair of pants, you just put in a bag and you go take it to the Goodwill, right? That information could be valuable to your tax return, because if you're at a point where you're itemizing, it's an itemized deduction, but you're just saying, oh, that bag was like $20, oh, that was $25. But just look at the estimator and see what exactly that is. That could be a lot more money. It could be like $5 or $10 per pair of pants, right? And you're just putting putting some pants in there, or shoes, or we give away, we buy and consume so many things and then we just throw it away or just give it away. It's like, track that, because that is a deduction. And then the other thing with W-2s is knowing how much you're contributing to your 401k or to your pre-tax. What's pre-tax, what's post-tax, how could that help you if you have more money? It's like, can you do something to reduce your taxable income? Maybe contribute more to your 401k or contribute to an HSA or an FSA or something like that, so that you reduce your taxable income. Okay. Questions? No questions? Okay. So we'll go on. So overlooked deductions. So business expenses should be ordinary and necessary for your business. And I say that because every business is not the same, right? Cleaning company is going to have different expenses. A tree trimming company is going to have different expenses. A beautician is going to have different expenses. So whatever it takes for you to generate an income, that should be counted as a business expense. But you won't know that if you don't track it, right? So on the next one, common overlooked deductions is business mileage, right? If you're using your vehicle for business, you should be tracking the mileage that you use to generate that income, right? So say, for instance, I have a home office. I go to see a client 100 miles down the way. I need to be tracking that mileage because that's a business deduction. You should have a mileage log where you're tracking, where you go to, who you go to see, like your starting odometer, your ending odometer, and what you're doing, so that you have that information available to produce to the IRS. You're supposed to have a log, but then you also have it at the end of the year, because that information needs to go into the tax return. When we're asking, when I'm asking, okay, what kind of vehicle do you have? How many total miles did you drive for the year? How many business miles did you drive for the year? How many commuting miles? It's like that information should be readily available. And if you're not doing it, it's like, start doing it. So let's look at it like that, right? That's how I'm approaching this presentation. If you're not doing it, let's start doing it, because we want to be better going forward. Okay. Your cell phone. Most of us use our cell phone for business, right? Most of us use our cell phone. You use your cell phone for whether it's, social media, answering the phone just to take a call, sending email. We have everything on our phone. So you want to keep track of like a percentage, unless you have actually purchased or have a separate line for your business. You want to kind of estimate or know how much you use your phone for business compared to how much you use it for personal. And then you're just going to take a percentage of that from your bill and include that as a business expense. Business use of home is another one. If in order to deduct or to count your home office, it needs to be a separate area that's specifically used for the business, and it's on a consistent basis. So like, I actually have a home office in my home. And so I'm actually able to take a portion of my mortgage interest, property tax, utilities, and that's a tax deduction. So that's something to keep in mind. Internet is another one that goes overlooked because it's not something that comes directly out of your business. I talked about subscriptions. So many things are on subscription basis. Those are a business deduction. And education expenses. Everyone's taking courses. If it's a course that you're taking or education, in my field, I have to have continued professional education, right? So I need to have like 80 hours every 2 years that I go and I get, I take some training, right? Where I'm caught up on tax laws or, new ways that I'm supposed to be, or not new ways, but updates on how to prepare a report or, ethics. I have to take ethics every year, but those are business expenses because it's for my business and it's to keep me educated in my current field. So if you have something like that, you want to keep track of it.
Hello, Marjorie. We're back.
You're back?
We are back with 3 questions for you.
There's another one in the chat we'll get to afterwards. We see you, Christy.
Yes, Christy. Yeah, appreciate you, Christy. So 3 questions for you. First question on the courses and education. Does it have to be like a certified, like you're going to a UC, you're going to Stanford, you're going to Harvard, or are these like online courses that teach you how to be a digital creator for $3,000? Not that I've signed up for any of those before. I have. I'm be honest with you. I have. Is that a tax deduction, or does it have to be a certified education institution?
It's not a certified education institution if it's for your business. If you're using it for education credit, for like a student, like your child, right?
Mhm.
For that, it has to be like an education institution. But for a business owner, when you're just getting continuing education, it doesn't have to be from an accredited university, but it should be in your current field. It's something to enhance what it is that you're doing, not going into something different. It's something that's related to your current business.
Good. That's good. Second question, kind of related, is like conferences. For example, we went to the All Black National Convention in Charlotte. We did table and conduct business there, do networking there. So if you go to a conference, either as just an attendee that's in your field, or if you go to a conference to actually work, is that like that whole travel experience? Is that a deduction?
Experience is a deduction.
Yeah, that's what we like to hear. Okay. So I'll take a break and we can read Christy's question. Then I have one more when we come back.
Okay.
All right, so she says, I rent a room and half is my home office. What's the best way to count that? Should I just take that to my CPA?
That was my question too, Christy. Thank you. That's good. That's good.
It's supposed to be a separate area that's not used for anything else. That one's kind of a gray. You may be able to get away with it, but I mean, it's like, could you meet clients there?
Virtually.
So, yeah.
Right? If you do a virtual business, and is it like, now I'm getting into the nitty gritties, but could you literally set up a little like divider and be like, this is my home office and this is the rest of it?
I think I would probably look at it that way better. Where it's totally like separate off. It's like, this is home office. This is all that is. That I don't do anything else for that. And then this is my bedroom.
Yeah. Gotcha.
But to have it like just your bedroom, and that may be a little bit. And then the IRS is cracking down a lot. So I've heard people say that they kind of take a picture of their home office as well, in case they ever need to prove what it looked like. And then the other thing is kind of like, what percentage of that is actually a home office deduction, right? Is it really worth it? Like my house, let's just say it's 2,000 square feet, right? But my office is 100 square feet. So it's like, is it really worth taking that little deduction? Because it's only a percentage, it's that ratio. So it's a 100 divided by the 2,000. So, it's a small percentage. They do have the simplified method, which you can do as well. But you just want it to be legitimate. Yeah. You want it to be more. Yeah.
And it's the percentage of the monthly rent or the monthly mortgage, or is it just a one-time deduction?
It's a percentage of the monthly expense. So if it's rent, it's the rent. If it's mortgage interest, property tax, whatever. So it's like we would put it in for the whole year, and then it's that percentage. Mm-hmm. Same with the utilities.
Okay, so I have a follow-up kind of. But let's say you have like a business based out of your kitchen. Let's say you have a bakery that you are baking out of your home kitchen. Is that like, but you still use your kitchen for regular cooking? Is that something you could deduct? Is it's technically kind of your office for your business?
All right, we're gonna get back to the episode in a second, but breathe. If you've ever had a brilliant idea, I'm pretty sure everybody just took a breath right there, right? Because we all have amazing ideas. But I got a question for you. What's stopping you from taking that idea and actually making it into a business, actually executing on your brilliance? My name is Devon Travell, and in 2018, I was able to create, market, and sell my own product while still working a 9 to 5. And through the years, I've taken the lessons we've learned, the expensive webinars that I've gone to, and the dozens of business books that I've read, and I've discovered 7 simple steps to launch your business. If you're ready to take your business idea to the next level and make it real and start making profit from your passion, head to www.launchitcommunity.com and grab yourself the book. We've been able to make it very simple, affordable, and easier than ever to start that business while still working your 9 to 5. And we take entrepreneurs every single Friday and we talk to them. We teach them about how to use social media. We teach them about how to set up their Instagram account, how to use Shopify, how to use Printful, and other tools that can help you take your business to the next level but not take tons of time away from your 9 to 5 and your busy life that you already have. So if you're ready to take that idea to the next level, make sure you head to www.launchitcommunity.com, get yourself a book, and join our free accountability calls. Now, let's get back to the episode.
That's a good question. And you know what? I would want to do some research on that, because that's new. You know, you have more people now that are actually using their kitchen as a business, right? But it's still their kitchen. So that's new. I would want to kind of see what the regs and the tax code is saying about that.
Gotcha.
Yeah. Good answer.
Any other questions?
No, I'm good. Keep it flowing. Christy, we appreciate you. Brother Tyree, Vern, we see you in the chat. Thanks for the energy. If y'all have any questions about tax deductions for business, your family, children, college, definitely make sure y'all continue to put it inside of the chat or comments.
Awesome. So this one I really want to touch on is organization expense, because a lot of businesses are just starting. So even if your business is just starting, you want to make sure that you're keeping track of everything that you're spending in order to get the business going, right? Because those are they're deductions. They're handled different ways, but you want to keep track of those. So it's organization expenses. That's like forming your entity. You know, you may need to go see an attorney or something like that, but you want to make sure that you're keeping that information. Startup expenses. We talked about travel expenses. There are ways to deduct your travel, you know, as a business expense. You know, you do business on a Friday, you do business on a Saturday, your weekend is covered. You want it to be for the people that are in the business, right? So you wouldn't want to do like a whole, you know, you can't take your whole family, you know, extended family on a business trip, and deduct it as business. It's like, you know, let's be realistic. But you can, like, if it's yourself and you're the, you know, husband and wife and you guys are in a business, you can go on a trip and use that as a business expense. The same with meals. You know, meals in a restaurant for 2022 are 100% deductible. So you can have a meal, you know, where you're discussing your business, and you want to make sure that you document that, you know, like who was there, what you discussed, and make sure you take a picture of the receipt. So you can do that. You know, married couples, people say you do date night and you make it a business deduction, but you don't want it to be lavish and extravagant as well. So keep that in mind. And then equipment. I put that in there because sometimes, you know, people will buy equipment for their business and they kind of forget about it, but like computers, monitors, crickets, you know, all of those different things, if you use them in your business, and that's a tax deduction. And I'm just going to do something real quick. I have a little, someone saying something to me in I'm on live here. So let me just see. So as it relates to home office deductions, what if you have more than one home-based business? Does the average tax software allocate expenses, or does taxpayer have to pick one business to charge it to? You should be able to put in both of the businesses, and it'll allocate it to it, but it's still based on the percentage. So we should talk about that one, Jacqueline. Okay, I'm sorry, guys. So on back here.
You're good. I love the questions coming from different directions. But something that I want to double back on, because you gave a huge nugget to married couples out there. I don't know if they caught it, right? But I caught it because I love food. You said 100% of restaurant expenses will be deductible when you're talking about business. And, you know, as a certified workaholic, I'm often talking about business.
Every meal, y'all.
Almost every meal. So can you just say that portion one more time in case people miss that huge nugget on the taking your partner out on a work restaurant experience, being able to talk a little bit about business, but also get that benefit. And then you said something about it not being extravagant and lavish.
Lavish and extravagant.
Yes. Can we talk about what the threshold for that is? Because I have a real example. We went out to Chicago, and we were doing some real estate investment in Chicago. So we were there literally buying a property, and we saw the person who we purchased a course from inside of a restaurant, and it was a lavish restaurant indeed. So I'm trying to figure out, like, is there a price point that makes it too much, even if you are, engaging in legitimate business and networking opportunities?
So I always like to put it like this. You work a 9 to 5, you've worked a 9 to 5, I've worked a 9 to 5. There are certain things that you could turn in for reimbursement, right? Look at it like that, right?
Gotcha.
Would your
the per diem,
that wouldn't apply.
That wouldn't have cut the per diem at all.
We would have been. Can I talk to you for a second?
and then
me in my office.
It's okay. I think that it would be okay to say, okay, yeah, well, we're going to go and we're going to have a nice, we're going to do like an end of year dinner, and we're going to discuss a recap, or like a shareholder may have a retreat, right? You do something like that, and it may be a little bit more, but you wouldn't want to do that all the time, right? You wouldn't want your meals and entertainment, or your meals expense to be $20,000 and you made $30,000. Right. So it's like just I don't want to say it, but common sense, but everybody doesn't have that. But just kind of look at it. It's like, would this have flown if I was an employee? Run your business like a business, right?
Yeah, I think that's good, because not everybody had that experience of being able to work for a company that will give you a per diem. So I think you can search. I used to work for the UC campuses. So you can search, UC per diem or state California per diem,
right.
Georgia per diem, and you can see what the government will green light for how much you can spend on lunch, on dinner, on breakfast. And you're a business just like those entities are. So you can establish that as your template.
Kind of like your template, it's like, it doesn't have to be so, so strict, but you just kind of don't want to be, like I said, lavish and extravagant and just kind of doing that all the time, because it's going to be a red flag. And also because more people are being exposed to the tax code, right? And exposed to the loopholes. It's like, it's gonna make the IRS is going to start auditing. So you don't want to do something that's going to make you stand out or not make you pass an audit. It's like, is it really worth it? Right. I could see a couple times a year, you guys go and you have a nice business dinner, business luncheon or something like that, business retreat.
Yep. I love the business retreats. Can you talk a little bit? Right? I love the business retreats. And I think these, again, are very like practical things that specifically married couples that either have a 9 to 5 and a side hustle, or you're full-time entrepreneurs, that I don't think we're taught that we can do for legitimate business purposes, but also helps with that work-life balance a little bit. So what would a legitimate business retreat look like if you and your partner are you're married and you want to talk about business? What would that retreat entail, or what can that retreat entail?
What would a retreat entail if you were working for a company? So the travel, the hotel, the meals, right? Because you're there for business, if you guys both work in the business, it may be like an activity, it could, but someone put in there a holiday party. You could do something like that, probably.
Companies have holiday parties.
Companies do have holiday parties.
They do.
M4 has holiday parties. I'll tell you that.
They do.
Cool. That's beautiful. I hope y'all are taking notes. Like, this is really good practical stuff that y'all can do to not only strengthen the business, give y'all more intentional time for the business, but also allow you and your partner to travel a little bit nationally or potentially internationally, depending on the legitimate business use. That's all I'm saying.
Thank you. Legitimate business use. And then, document it, right? It's like, have a business meeting, schedule the meeting and have the agenda and actually have the meeting, right? So that you're doing something that's business related, instead of saying, oh, we're doing this business retreat and we're here just hanging out at the beach and we just hang out. It's like, do something that's business, make it a business retreat.
Yep.
Like host a live podcast.
You could do that while you're there.
Listen,
if y'all been listening, you already know we have a couple episodes where we've been in Costa Rica. Where else?
Don't forget to invite your CPA, you know.
Hey.
You ain't lying.
Hey, tax planning. Let's do it.
Look, right.
Let's do
That's
it.
good. A tax planning retreat. Look, put in the comments if you would go to a tax planning retreat. That's all I'm gonna say. We're just gonna plant the nugget now.
So we talked about equipment. Okay, so let's go on to the next one. Excuse me. So tax planning and strategies. Okay, so we've kind of talked about some strategies, but let's go on to the next slide. Be proactive. That's a big thing. We want to, again, now is the time to be working on 2022 tax planning, not in January. You can't do anything in January. And let me just write something else. That relates to anything, you know, buying stock, you know, selling property, buying property, all of those things, you know, you can't do anything about it after in 2023. It has to do it now in 2022. So you have to know your income and deductions, whether you're an individual or a business owner. I say wage W-2 earner. Maximize retirement. That's a good way to be proactive with tax savings. Maximize entity structure. So we've been talking a lot about a sole proprietor and single member LLC, and I did mention about the self-employment tax, right? And like if you're making $100,000 net income, you're going to pay at least $15,000 in self-employment tax, right? But most CPAs recommend, and you know that's kind of my rule of thought too, is like once you start making like $50,000 in income, it's good to change your entity type so that you don't have to pay those self-employment taxes. So that's a good one, is knowing what your numbers are so that you can maximize your entity structure. So you may need to go from an LLC to an S Corp, or from an LLC to a corporation, you know, just kind of knowing which direction to go in order to reduce your taxes. The other thing is charitable contributions. You know, it's high now, you give money now and you get the tax deduction. There's also ways you can do like a defined contribution plan. I think it's a defined contribution. I have to verify that one, but you can put the money in now and then you can tell them where it goes so that you get the tax deduction now, but they can give it to them kind of later. So that's another thing to think about. So like, you know, sometimes people have a lot of income in this year, but they may not have enough the next year. But you can't make those decisions if you're not sitting down and looking at your numbers. So even with charitable contributions, when it comes to W-2 earners, you know, again, I said, you know, you may want to, it may come to the end of the year. It's like, oh, I could give this, you know, $3,000 or $5,000, whatever, in December, or I can give it in January. Which one is going to be more beneficial for me when it comes to my taxes? Even making it extra tax payment or a mortgage payment. It's like, those are all things that you need to look at. So because it may benefit you. It's like you may make an extra mortgage payment on the 31st of December, and that takes you into a higher, takes your deductions higher compared to if you wait until till January in order to pay it. So those are all things that you do with tax planning. Also, you know, it may be kind of like timing for income and deductions, paying expenses ahead of time, you know, so that you get the deduction in this year, or waiting to pay a bill the next year because it's not going to make a difference. You know, you have bigger loss this year, you may have more income next year. But all of those are things that come with tracking and being intentional about knowing your numbers and paying attention to it. So let's see, what if I only anticipate making the amount of to change my entity structure for this year? What are we worth changing? It depends. So if you change your entity structure, like if you go from a sole proprietor, or if you elect S Corp status, you have to stay there like 5 years. I think you have to stay there like 5 years, or either if you go there, you can't change. But you can't just go back and forth. So that would be a matter of seeing what it would make difference for you for this year. Did that make sense? Was that clear? But you can't just say, okay, I'm going to be an LLC this year, but then I'm going to be an S Corp next year. No, it's like once you make the election, you're there. And then like if you change it back, I think you may have to wait 5 years. There's a 5-year period, and I will get that exact understanding of it. But it's a 5-year period. Either you have to stay that way for 5 years, or you can't change back if you change back for 5 years. So, so that's good to know. And that's something that you would want to sit down and talk to your CPA about. Okay, so we go to the next one. So maximize deductions. We talked about travel. Another deduction that is big. You guys hear the G-Wagon, right? Everybody wants a G-Wagon because they want to maximize their deductions. And that has to do with the Section 179 and the bonus depreciation, which is changing as of the end of this year. But keep in mind that buying a G-Wagon, it's good, but you want to make sure that you have the income, and you also want to make sure that you have the business purpose for it. So every tax strategy, every situation doesn't apply to everyone. So you need to know what applies to you and have those conversations. But, it all starts with knowing your numbers. So that's another strategy. The other one is hire your children, right? You can hire your children to work in the business for you. You can pay them up to about $12,000, maybe a little bit more. It's based on the standard deduction, and they end up not having to pay tax on that because it's under the standard deduction amount, because they would have to file a tax return, and then the business will get a deduction from it. So that's advantageous if you have a child that's going to work as an employee. So keep in mind that you're hiring your children. They're an employee. You can't just say that they're going to work for you, or that you just give them money. You need to document that. And again, I say the IRS is starting to look at all these things. So make sure that you have your ducks in a row. So if you're hiring your children, make sure that you have to pay them a paycheck. They have to be on payroll. They have to have a job description. They have to actually report to work, and you pay them into their account. So you want them to actually be an employee. But there are a lot of benefits to hiring your children, but you want to, again, make sure that they are actually an employee. Another one is the Augusta rule, which means that you can rent out your home for up to 14 days and not have to report the income. So say, for instance, you want to rent your home for business, right? You would set it up, sign a rental agreement, pay from your business, pay to yourself, but you can only do a maximum of 14 days. And then you as an individual don't have to report that income on your tax return. So that's a good one. Again, I have to keep saying that all of these different things, they are unique to each individual. So make sure that you speak with your tax professional. Accountable plans is a big one for corporations and S corporations. And those are where you can reimburse for expenses, and the individual doesn't have to pay for it. So for instance, like we were talking about the business use of home, if you're an S corporation shareholder and you're an employee and the S corporation has an accountable plan, you can actually submit a reimbursement every month for renting a portion of your home, for your portion of the cell phone bill, for mileage, right? Again, think employer. And then the employer reimburses you for it. It's a tax deduction for the employer, and then it's tax-free income for you. And that's for S corporations. A lot of people forget about that, but that one's huge. It can account to a lot of money. And like I said, it's tax-free money for the individual, and it's a deduction. It's a business deduction for the business. Talking about, so wills and trusts and step-up and basis, those go to generational wealth. And before I go in there, I just wanted to check in with Sinclair and Devon, see if they had any questions.
It's like you were in our brain.
We were percolating over here. Oh my goodness. So where to start?
You want me to? Okay.
Let's start with the Augusta rule.
Okay, yeah. We've been talking about that.
We've been talking about the Augusta rule because we've never heard of it. And yeah, so Queen, I don't know if you had a particular question, but one, I just want to kind of re-go over it again to make sure I heard it correctly. And then we got some follow-ups.
So my first question was on the timeline. You said you can rent it out rent out your house for up to 14 days without having to report that income. That's a 14-day period within a year, or what's the time frame?
It's within a year.
Okay.
So yeah.
And
per
then
year without needing to report the rental income. I did something. There we go. Okay.
Does it matter what you're renting it out for? Like, can I say your idea?
Yeah, go. You know what? So first off, everyone listening, we're about to give you, if it's applicable, $1 million play over the next 10 years. $1 million play right here. This is our idea that we just came up with based on just the little knowledge we have, and we're gonna see if Marjorie's gonna shoot it down or praise it up. Go ahead, Queen.
Like, let's say you have a larger estate or like a big backyard or something like that where you can host events like a wedding that costs thousands of dollars. You're saying 14 days. I mean, a wedding typically is only one day, maybe 2 days that somebody would be renting it out. So like, are there stipulations on what it could be rented out for? Because I'm thinking hosting 14 weddings in a year of, weddings can cost anywhere from like $20,000 or something like that.
Pay for itself.
I'm just percolating up here.
There aren't any stipulations as far as how much it can be for. So like during events, Super Bowl, the Augusta rule came about because of a golf tournament, right? There were people in Augusta, there was a golf tournament, and they would rent out their home for this tournament. And so they were able to, because it was, under the 14 days, to not include that income. So you could have something there.
Listen. This is why it's so important to learn about these things, because the Augusta rule came about because I'm assuming this was a very wealthy family that was hosting a golf tournament, and they were just like, you know what, we're having all this income, we don't want to do the taxes. Cool, beautiful. But now that family changed the tax code,
it's not just the one person. It was like they would have this golf tournament, so there were people in the area that would rent out their home. So
got you. The whole community.
When is the Olympics about to be in LA?
That's a great point. So the Olympics is coming in 2028, right? There's going to be thousands, if not millions, of people that are pouring into LA, Southern California. So if you own a home and you're in the opportunity where you can maybe remove some of your personal stuff and host events, that's going to be a amazing time to listen. We got to run the play, y'all. Y'all got to run the play. If you didn't learn anything else this whole week, run this play.
Just know these are the types of conversations we be having at dinner.
Literally, we'll have this. Oh my!
Like, what if we could? Oh my gosh! What if we?
So we need to make sure we get a nice little something by then. Okay, that's the rule.
Make sure you get a nice little something like there. My CPA friend said it was the Masters tournament.
That totally makes sense.
Yes.
Look, and it's just crazy. I'm sorry, I do not want to take us on a tangent, but it is crazy how laws and regulations and things get changed for certain communities. And this is why it's important to know them, right? This is the first time maybe a lot of you are hearing about this and how you can now take advantage of it, because they've taken advantage of it. And this is how people are getting the leg up.
Literally.
Yeah.
You gotta know the play, run the play.
Run the play. If you have a house in LA, run the play.
Hey, listen, I'm gonna talk to my auntie. She got a house right there in Inglewood. It's prime location.
And even in the IE, folks have, I mean, there are pockets in the Inland Empire where you can get properties with a lot of land for really inexpensive. And I mean, anywhere there's people who are living are gonna need places to rent out for weddings, for quinceañeras, for different things, right? You can definitely have this be a little side hustle. This is great.
Right, that was good. I have more questions, Quinn. We put up the.
Okay, my bad.
Yeah, I'm sorry. So real quick, you said that the 6,000 pound rule of the G-Wagon wool is going to possibly be changing by the end of this year. Do you know what
this year it changes? So if it changes, it's going to be like December 31st.
Okay, and do you know what it's updating to, or is it's just being completely deactivated?
It's not going to be completely deactivated. It's probably going to go back to probably like 50% No, so let me take that back. So the bonus depreciation, which is now at 100%, it used to be like at 50. So I'm not exactly sure what it's changing to. What happens with the Section 179 is that it used to be at like, I want to say like $250,000 max, and I think it's more like at the millions. Yeah, but I don't have those exact numbers, but it is changing the end of the year.
Okay. And
Yeah.
kind of a follow-up to that, and then I have one separate question. That's changing, but you can still, if you're using your car for normal and appropriate business use, you can still write off the mileage, or maybe if you're leasing a car through your business, can you deduct that lease payment? So like what are the alternatives if the car doesn't weigh 6,000 pounds?
You can. It depends on, so a couple things. The business usage for the vehicle, right? And like we talked about business mileage. So you can deduct either actual expenses or or the mileage. But so the actual expenses are going to be based on like the percentage that you use the vehicle for, right? The mileage, you usually get to deduct the mileage. I didn't say that right. So it's either or, right? Most people end up, the mileage usually ends up being more than what the actual expenses are, because the actual expenses are going to be based on the percentage that you use the vehicle for, right? So say for instance, your lease expense is $6,000 for the year, but you only use it like 10% based on the proration of the total miles to the business miles, right? So you only get to deduct $600, but your mileage could be, more based on the cents per mile amount. So it's the higher of the two. But I think it's important because a lot of people say like a lease payment, but it's based on the percentage that you use your vehicle in the business, right? And it should be legitimate business use. I kind of think of it like I have a client that does trees, and so they have these big trucks that they use to go and cut down trees, right? That's a business. That's more like equipment, but that's like a business vehicle. It's like, so you have to look at it. It's like, do you really have a vehicle that's used 100% or more than 50% for the business, not just commuting, but actually for the business? An Uber driver, they use their vehicle a lot for business. You could have a delivery company. You could,
we're thinking over here. We're thinking. Okay.
Something like that. But you want to use it for your business.
Yeah.
Not just have it.
Okay.
Not just say that it's for business, but you want to use it for your business.
And not just the commute. Okay.
And not the commute, not because the commute doesn't count. It's like we don't get to commute. We don't get to deduct our commute, right? When I was commuting, an hour and a half to work every day, it's like nobody paid me. I didn't get to deduct my gas.
So I did get to deduct. So if I was going on like a recruitment trip, I'm going to a high school, I'm going to a college, I got to deduct those miles. If I was going to a site, right? So if we have sites, which we do, we have sites where we have high schools and we have colleges around where we drive to on a weekly basis to get to these places and to teach classes. Even that vehicle, we would just do the mileage. It wouldn't be if I have a vehicle where I only do site visits with this car.
I think if you had a vehicle that you only did site visits with, right? And so you only use it for business, you never use it for personal, then yes, that would be 100% business vehicle.
Noted. Okay, noted.
Yeah.
Last question for you. Last one, because I know we're over time. Appreciate you. Literally, you've given $1 million worth of gems in this. It's been really good. Well, you talked about being able to hire your kids. And, as we talked before this session, we don't have kids yet, but we really want them. They're going to be around and they're going to be working in the business, Miss Marjorie. Look, listen, they're going to be working. So if we pay them the wage, can we still also take the standard child deduction, or do you have to pick one?
Well, you can, and just think of it as like your child goes out and they get a job working at McDonald's or Starbucks or something like that. Instead of them working for Starbucks, they're working for the M4 show,
Yes,
right?
ma'am.
And so you just pay them as an employee. You can still claim them as a dependent because you provide over 50% of the support for them, but they also have earned income, and they just need to file that return, and they need to note on the return that they're paid as they're claimed as a dependent on someone else's return.
Listen, that's a huge unlock, because I know as a kid, no disrespect to my parents, but if I wanted to go to the movies, I had to find out a way that I can earn some money to go to the movies. If I wanted to go to Six Flags, if I wanted to get some new shoes, I had to buy all those extra stuff. They paid for my beautiful, amazing life. But if I wanted extra social stuff, I needed to get a job working at McDonald's, working on a farm to pay for those things. But in this model, right, your kids can work for your business for the extra stuff.
For the extra stuff.
Yeah, I love that. Our kids would definitely
and hire them as employees, and make sure that you have job descriptions, age appropriate duties. They're employees on payroll. They have a W-4. They have a bank account where it's going into. Run it like a business. They're an employee. Age appropriate. My granddaughter is 11, and
she's already
working.
I love it.
You're gonna learn how to do some taxes around here.
Listen, the youngest CPA in the world, right there. 12 years old, letting you know.
It's like, let's go. So, but yeah. So really quick, just to kind of wrap up, let's talk about wills and trusts. So we're talking generational wealth, right? How to transfer your assets, your hard work, your businesses into the next generation. So a will just kind of explains what you want to happen. A trust is who owns the assets, right? So they go hand in hand. And my recommendation is that everyone that owns property should have a trust, and the trust should own your property. What'll happen is that you're alive, so to be a living trust, it's a revocable trust, which means that you can change anything in the trust up until the time that you pass away. When you pass away, it becomes an irrevocable trust, right? And when it becomes an irrevocable trust, then it's a separate entity, and your successor trustees have to manage those assets and distribute them, and pay the taxes on everything. And it just makes for a smoother process. And it also eliminates probate. Some people are okay with probate, but probate is expensive, it's public, and it can take a long time. So, know what you want to do. Again, the word is intentional. We're being intentional. Be intentional about what you want to happen to your assets, who you want to get them, and keeping as much money as you can for your family and not giving it to the authorities. So that's my thing on wills and trusts. Wanted to talk about step-up basis. So a lot of times you'll have, as people progress in age or things happen, they'll start to sell off their assets and, want to give the money to their children or do, something different like that. When someone passes away, the basis in that asset is stepped up to the fair market value. So say, for instance, you purchased a home 20 years ago at $100,000. You pass away, the home is at $1 million, right? We're in California. The home is at $1 million. Your heirs inherit that property at $1 million basis, which means that $900,000 of gain, they don't have to pay taxes on it. So that's something to keep in mind when you start thinking about generational wealth and how to pass on the wealth, because tax on $900,000, even though it would be long-term capital gains, it still could be kind of could add up. So that's something to think about. And then wanted to touch on inherited items. So if someone inherits something, if you leave something to someone that is already yours, they don't pay tax on it. So like cash, life insurance, you don't pay tax on. A home you wouldn't pay tax on because it's an asset. Nothing has transacted. So that's another way to pass on generational wealth. You'll pay taxes on things that you hadn't paid tax on before. So like if you inherit a 401k or an IRA, you would pay tax on that because there may have been the tax wasn't paid up front. So now you have to pay tax on that when you receive the money, or like a pension from someone, that may be taxable. So wanted to touch on that. So things to think about with generational wealth. And I think that may be it. I think I may have another slide. Also, for just some things to do, review your 2022 numbers and set aside funds to cover taxes. It's tax planning season. I'm doing a lot of QuickBooks cleanup, which we're trying to get away from doing QuickBooks cleanup. But QuickBooks cleanup, where we're making sure that your books are up to date through through October, November. We know kind of what to expect with your tax return. And now is the time to make changes. If you need to change your entity, now is the time to do it. If you need to be put on payroll, now is the time to do it. You can't put yourself on payroll in January. There are very few things that you can do after the year end in order to save money on taxes. So get that done now. Start using accounting software so that you can track. Sorry, guys. So that you can track your income and expenses, track your mileage. If you haven't done it before, start doing it now. And that's twofold too, because you're getting a good starting point for going forward into 2023. And you kind of know where you are from now. So you can estimate, what happened in the beginning of 22 based on what happens over the next 6 weeks. So start doing that, implement a system to save receipts, and review your numbers on a monthly basis. The goal is to be proactive and to track. You can do a lot more when you're tracking. It just makes you aware. And I'm learning that too, not just in taxes and finances, but in business, as a business owner, it's like, sitting down and looking to see how much money you made in a month or what your expenses are. It just makes a difference in how you move, right? So I think that's all I have for you guys. So any questions, you guys can drop them in the chat. Follow me on Instagram. You can go to the next one. I think all my stuff is there. Oh, so I talk a lot about tracking and understanding your taxes and being knowledgeable. So I wrote a course. So when I first went into entrepreneurship, when I first went out on my own back in 2020, one of the reasons I did that is because I saw all of the money that was being made in taxes, not in taxes, but all of the money that was being made on the internet. It's like people were making $100,000 selling options, trading options. People were making $100,000 in a day, selling digital products. There was just so much money that was being made. And mind you, these are people who may have had a job the prior year. So in 2019, their W-2 looked like $70,000. And then in 2020, they're going to have a 1099 that's saying 1.5 million, right? Or they're going to have stock transactions that are, $100,000, $200,000 in capital gains. And so I wrote a couple of courses. So I wrote my course on stock options. That was the first one. I wrote a course on understanding my taxes for individuals and small business owners, where it just goes over your tax return from beginning to end, kind of like what I did, but a little bit more in depth. There's some worksheets in there. There's also some comparisons between if you're a sole proprietor and if you're an S corporation. So that's in there. And I think they may be at a pay what you want. But the one that the one that I'm really passionate about is the last one that I wrote, which was on the screen. It's $47 for the course. So I go over a lot of the other things in the business, helping you to understand how to run your business. I think we talk a little bit about tax planning and strategies. There are a lot of handouts in there. There's checklists on documents that you need to prepare your return if you're an S corporation, if you're a partnership. There's a spreadsheet for Schedule E, a spreadsheet for Schedule C. I also so that's like the basic course. You can do an upgrade and you can get an overview of QuickBooks and Wave, where I go through how you, just kind of how you maneuver through the program. And then the other thing is you can do a bump up and you can get a 1-hour session with me where we set up your QuickBooks. And I think that's priceless, especially now, at the end of the year. I think it's priceless, for everyone to get. If you're a business owner, you need to have QuickBooks, you need to have it set up, and you need to be tracking your income and expenses, to catch up for 2022, to get a jump on your 2022 taxes. And also, again, to go into 2023, in a positive way. So The total value with all the upgrades is $347. There is a code for the M4 show for 50% off. So that takes it down to like I don't know what it is. 150, 170, something like that. But it's invaluable. The information is there, the 1 hour session going through setting up your QuickBooks, and not just that, but being able to have a conversation with the CPA. I think that that's invaluable. Devin and Sinclair, they take advantage of it. It's like, ask your questions, get the information, get knowledge. How are you going to grow and build if you don't have the information? It's, I said it in the beginning, my people are destroyed because of a lack of knowledge. We as business owners, as individuals, have to get the knowledge so that we can grow, so that we can build, so that we can leave an inheritance to our children's children. So my passion is on helping you to succeed. Anyone who knows me knows that I am an encourager. I'm a supporter. I'm here for you. And it's not just the numbers. So let's win. I think that's it.
Yes. Come on. If y'all got any value, any nuggets out of this, make sure you put some love inside of the chat. Throw some emojis in there, some flames, some hearts, some money signs, a crown, a cloud, because they're about to make it rain this tax season. All that, put it in there. Right. And we're already saying we've done multiple consultations with Marjorie, really good stuff. But we're going to take advantage of even some of these additional offers. All right, so make sure y'all go to her website. We'll put her website on there one more time.
Go to my website, check out my Instagram. I'm gonna tell you, there's probably some stuff on there. Just click on the links, because I think there's a couple of them that are like pay what you want. I think one of the courses is like pay what you want, and it's for me, there's free downloads. It's all about getting the information out there. I want to be able to share as much as I can. It does me no good to hold on to it, right, when it could be helping someone else. So
love it. We got some flames in the chat from the Hustler for Show. Right. No, a lot of people got a lot of nuggets out of this. Let's see. Anything else we gotta let's see. Thank you. Oh, we got thank you from I can't read names. What's that name say, Sinclair?
I don't know. Cerise?
That's my niece.
Come on, family. Come on. Get the nuggets. Get the nuggets, right?
Yes.
But again, but much appreciated. And as you know, you have a residency at the M4 show. So anytime you would like to come back and tell us more about the nuggets, talk more about this Augusta rule, because we're definitely going to have a long conversation this weekend about it. But we appreciate your time. Make sure y'all go to Marjorie McPike cpa.com. Take advantage of those resources and put in the code M4SHOW for you 50% off. Okay. All right. Thank you, Ms. Marjorie.
Thank you. Bye.
Listen, y'all, Sinclair over here cutting off our professional CPA. Goodness, now our tax is not going to look good now. Man, but we appreciate y'all. This has been a 4-day challenge. We've covered a lot of really good stuff. And this all came from a thought we had maybe 2 months ago. We were like, you know what? How can we get people together and just intentionally build marriages? Right. We think it's a problem that only 2% of Black families have a net worth of $1 million. We think it's a problem that only 50%, right, of Black folks are single. They're not married. Less than 40% are married in America. And these are just things that we want to help be a solution, help be a source for. So we're starting this challenge. This was the inaugural $1 million marriage challenge.
We got so many M's and all of
M's. Look, this was the inaugural MDMC $1 million marriage challenge. We do plan to have this at least once a year, if not twice a year. If y'all have suggestions for us, definitely make sure you tap in with us. You can go to the m4show.com, the m4show.com. You can give us your contact information there or ask questions on that website just to figure out the next time we do this, what should we change? Right. We think this was a good introduction to a lot of different things, but me and the Queen, you want to talk about what we've been discussing a little bit as far as how we might change it for the next time? Not yet.
Well, okay, so we have individual we've doing individual workbooks for this first go around. So each day is going to have its own workbook with follow-up questions that you can really take action on the information that we've talked about. And same with today. So, and that's on the website, right?
That is on the $1 million marriage challenge.com website. Yes, ma'am.
Boom, link right there. So what we're thinking about doing for the next time is maybe like an actual plan where throughout the challenge, you're filling out different parts, and at the end you have actually a laid out strategy to attack, the next year, the next quarter, whatever it's going to be, whether it's a wealth building strategy or a tax planning strategy. So that's one of the things. And then also we're also thinking this one was really kind of a general, like, how do you just take your marriage to the next level and build generational wealth? We're also thinking about having challenges be a little bit more specific.
Yeah,
right?
Sniper focused,
Right.
laser focused on a particular topic.
Yeah.
All right.
So tax planning, I don't know what else we need to.
Communication, entrepreneurship, wealth transfer strategies, right? We talked about wills, we talked about trust, we talked about life insurance. So how can we have an entire challenge that's literally just built on how do you transfer wealth to the next generation? Okay.
Building a business with your, right? That can be a whole challenge on itself for entrepreneurship specifically, right? Couples who are starting a business, like how do you set up your business? How do you develop the roles within your business? And that can be a whole challenge itself too.
Exactly. So if y'all have suggestions, definitely make sure, again, y'all hit us up. And of course, make sure y'all actually register for this event if you haven't. If you want to get continual updates, if you want to get invited to these really cool events, if you want to get invited to the event that we're going to host at somehow, somewhere using the Augusta rule, we need to make sure we have your contact information. And if you also want access to all these replays and freebies, go to the link below and register. You can also go to $1,000,000marriagechallenge.com, click register. Any amount of funds that you're able to provide at this time, right? We didn't want this to be a barrier for some people. So whether you have $1 to donate, you have $1,000 to donate, whatever you're able to, based on the value that you got of it, provide that. You'll get all the resources, all the replays, and you'll be able to continue to build. Okay. So we appreciate y'all, Queen. Are you good?
I'm good. This has been good. We appreciate y'all rocking with us this challenge.
Oh yeah. A lot of love. One last shout out to our sponsors and our partners. Of course, y'all met Marjorie McPike. Much appreciated for your partnership. We also had Married Into Crazy, which came on day 1. Thank you for your partnership, Lovey and Rana, or Lovey and Snooks. And then we had TMG Consulting with Coach T. Brother Muhammad came through and talked about life operating principles. So a huge shout out to all of our partners and all of our sponsors. We look forward to continuing to build this melanated millionaire table with y'all. Make sure y'all keep rocking with us. Stay tuned. I'm your host, Devon Travell, creator of Black Wall Street, the board game.
And I'm Sinclair, aka the Health Nerd.
Make sure y'all secure the marriage. Make sure y'all secure the love. And of course, make sure y'all secure the bag. Thank you for supporting the M4 show and our mission to increase the wealth of Black families.
If you received any value from this episode, any value at all, any, do us a favor and give us a like and subscribe on YouTube and Apple, Spotify, anything, all of them, all of them, wherever you're listening, go ahead and like and subscribe.
And after you like and subscribe, make sure you send this episode to at least one family that you really want to see win. We'll catch y'all next time. Peace.